Hello out there and good morning traders. It's January 12th, 2024. Welcome to the Apteros Daily Market Insight. Let's get into our recap from yesterday and we'll update our plan and our session levels for today. So taking a look at what was going on yesterday, we had a straightforward line in the sand here where we just had a bullish up above scenario and a bearish down below scenario. We are looking for some stretch targets into these two different ideas, just waiting to see how the acceptance picture played out around our line in the sand. We were definitely more bullish in the early part of the session, and then we had some catalysts here that kind of shifted the nature of our line in the sand, which was actually a really great set of opportunities coming out of yesterday's trading session. So heading into the open, we ended up seeing a really nice hold and wick around the 8:30 news numbers, and that was in line with our prep. We were looking to get long in this section here, heading right up into our first neutral target area there. From there, heading into the open, it started to get fairly bearish. A chance possibly to get long right in here, but it just doesn't work out, and then we don't really see anything else as a chance to get long. It just breaks down to the downside, and then we have a wonderful opportunity to get short around this area here, heading straight down into our stretch target there. Yeah, a couple ticks short of it, but that was really the opportunity of the session there around 10:20, something like that. And then from there really wasn't much else for us to do in terms of planning. You could have possibly gotten short again up in this section here, heading into the close, but with the close coming up, you got to be careful with that time risk whenever it comes to getting into a position and holding it. Unless you're scalping, in which case, there's some chances to stay bearish in this section here. As you can see, it held from the higher edge of our line in the sand area. So that was the general breakdown of what was going on yesterday. A fairly straightforward session for us, looking for scenario 1 early on, heading into our first target, check, and then looking at scenario 2 after we saw the acceptance picture shift, heading into our lower stretch target, check. Okay, so now taking a look at what's going on today, the ES is in a very dissonant spot between multiple time frames. So it's one of those scenarios where it's really not a straightforward day to say, hey, just get long, hey, just get short. We do have an area to watch out and pay attention to what's happening around that zone. We have two lines in the sand for today. We have an upper one that's bearish. We have a lower one that's bullish, but we have a lot of congestion on our time frames. So whenever that kind of situation occurs, I always implore people to use caution, keep your ideas a little bit more tight in terms of risk management, and don't over leverage yourself on a day whenever the narrative isn't as clear where the best risk reward landscape is, and that's what we're looking at today. But overall, I'll give you the general plan on what's going on out here. So let's start with our upper line in the sand, the bearish line in the sand here. Our first scenario coming out of this bearish line in the sand will be scenario 1, which is that it holds and we continue back down to the downside to traverse inside, hitting into that bullish zone first. If we get continuation below that, that's where things become a lot more clear to the bearish side of things. So scenario 1, if this bullish line in the sand broke down and continued to the downside, this would be an opportunity along with that scenario. And of course, any continuation down below that also checks out for the kind of all clear for the bears. So whenever we get down into here, this is where it's a lot more bearish in general across our different time frames. So that's kind of what you could pay attention to within scenario 1. However, it all would originate from up here around that line in the sand zone, from that different scenario there. Now, scenario 2 is a break up above that line in the sand. And if the lower edge of that is all bearish, then the upper edge of this is a lot more bullish as well. So if we get up above, that's what we're looking for out of scenario 2, breaking out of that line in the sand and heading up into that stretch target up here. And that would be a little bit more of a clear sign for the bulls. All right, so just a quick breakdown or a quick recap of that. Scenario 1, holding this line in the sand, which we've already started to see up into here. And then, of course, monitoring what's going on right here at this bullish line in the sand. Like I said, it's a dissonant market, so this is an area that we have to pay attention to for the bulls. But if it broke down, much more clear down into here to be bearish for possible continuations and downside as well. Okay, so that is the upper line in the sand. Now, the lower line in the sand, very similar type of situation. We'll look at scenario 3, being that this particular one holds, heads back up to this line in the sand, and we break up above, right? If we see that type of scenario, it would be kind of a combination, right, of 3 and then 2 up above that line in the sand, and we'd be monitoring for the upside here. Okay, so that's kind of like where we're currently at in terms of price and acceptance and where we're really just testing right now. Now, I will say that scenario 4 is once again that continuation idea with scenario 1. It's how these kind of play together. If that line in the sand breaks down, heading down to this section here, that would be the first leg of that breakdown scenario and then a possible continuation across the board. Now, if you want a clear kind of like, all right, I have two lines in the sand, I can see all these different scenarios, here's the way I would break it down to make it simple. The distance or the area between these two is not as clear. It's the dissonant zone. It's a really dissonant zone. Once you get up above the bearish line in the sand, things look more bullish. Once you get down below the bullish line in the sand, things get more bearish in general. Okay, now what's really important about this situation is that once we clear these lines in the sands out, that you see clear indications and holds that one side of the market has control. Otherwise, it could end up just doing like a little wick and come back into this zone here. Okay, so that's something that we have to pay attention to. But overall, that's the breakdown of the DMI. It's a little bit more of a complicated explanation today because the market isn't as clear, and we do have two lines in the sand that are dissonant up against one another. And whenever we're in that type of situation, like I said, I advise caution. Wait. You could wait for the all clear. That's one method. You could wait for, excuse me, either that bullish area or that bearish area to even engage in the market. You could operate in between these two lines in the sand and keep your expectations short and then get back on board if the market breaks out one way or the other. There's a lot of different strategies you could use here, but the conservative one, my suggestion is not much inside of this zone here. Wait for the all clears if they develop today. If they don't, there's nothing for you to do, and there's nothing wrong with that. Sometimes the best actions to take in the markets are no actions, especially whenever things aren't as clear like they are today.